And we are live. This is Travis from Carter Cow Capital, Trade with Travis, and Expert Advisor Reviews on YouTube. Hope everybody's doing very well on this Thursday morning as we get through and take a look at what's happening from an overall trading perspective. Sorry for being late. I've literally been up since I want to say probably about 2 o'clock this morning, but had to do some daddy duties real quick. So hopefully y'all understand. For the people that end up missing because of that, I do apologize. But for the people that are watching and the people that will be watching live, thanks for being able to pop in. I do appreciate each and every one of y'all being able to watch and also be able to learn as we go through and take a look at some overall trading activities. But let's go ahead and get started. Let's go through let's go ahead and go through the disclaimer. Then after that, we'll go from there. For the people that are online, let me know if my sound is good as we go through and get everything else done. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision. Now, understand that trading involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, just let me know. If you end up making money yesterday, it's not promised that you can end up making money today. So with that being said, what I'm going to end up doing is typing in hi inside of the chat box and then saying, let me know if my sound's good. If my sound is good. After we go through and kind of get everything else done, once again, like always, don't be a stranger. Make sure that you end up saying, hey, always good to be able to pop in. Get ready to show myself onto the screen. Hopefully I'm presentable. Let's see. Let me move this over just a little bit. And good morning. I don't know if y'all can see my green screen behind me. I don't have it set up, but there we go. There we go. Perfect. 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 Hope everybody's doing very well today. Hopefully you end up having a good trading day yesterday. Obviously we end up having CPI data on Tuesday, the last time we end up checking it for US 30 trades end up going in and then after that we end up quickly exiting after the market ends up having a quick jump and a quick bounce back. So hopefully you end up doing that to be able to make in profits, but we end up going from there. What's going on? Um, I'm gonna say I'm not gonna mess up. Hopefully, I'm not gonna mess this up. Let's see what's going on, Gray. Um, I'm gonna say Nika. Hopefully, I end up saying that right. If I end up saying that wrong, I do apologize. But thanks for being able to pop in. If you have any questions or if you have a pair that you want like to be able to talk about, make sure that you end up placing inside of the comment bar. Obviously, as we go through and get everything else situated. But thanks for being able to pop in. I truly do appreciate that. Let's see. Yesterday, we ended up having GDP from the pounds. They actually ended up being negative numbers. We ended up having President Lagarde speak, and we had retail sales from the United States dollar that was actually pretty good. Going into today is going to end up being pretty slow, and Friday is going to end up being pretty slow as well. As we end up taking a look at it, um, we're going to have Fed Bullard, who's going to end up speaking a little bit later on today. That's not going to move the market. With the Bank of Canada, Governor Macklin's going to end up speaking. He's not going to end up moving the market as much unless oil prices end up making a move. We'll talk about that as well as we end up going through. Um, let's see. But let me both know, since both y'all end up placing in comments, have y'all this week, has it been red, green, or have you been in the black? When I'm saying red, that means that you end up having a losing week. Green, that's been a winning week. Or black means that you haven't been trading as much. Let me know. Place it inside in the comments. Currently, right now, you're doing very well overall when it comes down to the charts, especially with our automation systems and everything else like that. We're definitely in the green when it comes down to that. From a manual trading perspective, we are in the green as well, based off of the trades that we end up taking a little bit earlier on US 30. Now, if you would have stayed in it the whole time, we would have been in the red. But ultimately, like I end up telling everybody, obviously use your discretion when you get into trades like that. But overall, let's talk about it. United States dollar index, as we end up going through and looking at this from a weekly perspective and a daily perspective. Um, we are in a transition trade, meaning that the market should be looking at being able to pop up. That means that the United States dollar pairs overall, I believe, is going to end up being stronger. We end up having this strong consolidation that was at 12,620 with a resistance of 12,750. Market ended up breaking out of that a couple weeks ago. Remember, anytime that you end up having a breakout, then you end up having a retest. The retest ended up happening earlier last week as the market. Let's go back. Let's try that one more time. Daily. So what ended up happening was that the market ended up breaking out and actually ended up giving everybody a chance to be able to retest twice. And I don't know if y'all noticed this, but you take a look at this blue line. I'm actually going to end up changing it. I'm actually going to change the color of it. I'm going to go and change it to magenta. Um, what ended up happening was that this market ended up breaking out of this area, retest one time, push right back up, and then retest it again. And then currently, right now, we're looking at this as a way of being able to see if this market is going to end up breaking out. If it breaks out of this overall area, 12,864, then it has a very good chance of being able to pop up and getting up to that 12,960 area before having any type of resistance. Now, if this market does break down and stays within that 12,864 area, between that 12,757 area, so between this orange line and this magenta line, then the market's going to end up being in consolidation. But as we end up talking about for the last few weeks, with the United States dollar index being in a transition trade type of position, that means to me that ultimately what we're probably going to end up seeing is that we're going to start to see that this market starts to trend a little bit. And that's not surprising because obviously you take a look at it, especially for people in the States. Um, Most people are starting to get income taxes back in, or most people are starting to be able to get a little bit more funding that they can actually be able to use inside of the market to be able to kind of create some type of income off of it. Now, with that being said, by being able to have that, that allows you. This mouse is about dead. We got to figure that out. With that being said, that does give you an opportunity to be able to see more liquidity in the market. And if there's more liquidity in the market, then that means that there's going to be more momentum and movement in the market overall. So I do expect that to be able to happen. So from a 2 hour perspective, this is what's going on. We have 2 out of the 3 factors that will allow us to be able to look at being able to buy this trade. The first one is that the market is in the buy zone. Um, Market is in the buy zone when it comes down to the 2 hour. The weekly is in the buy zone when it comes down to movement. The daily is showing that it's going up. So we have weekly and daily momentum. So we do have a trade that we could possibly be able to look at. The only thing that I'm looking for right now is a counter trend line break between this black line going up to the upside and being able to see once we end up having that market have a counter trend line break, seeing a candle actually close above this. If that happens, then we have a very good chance of being able to take a trade. Now, for my swing traders out there or my scalpers out there, stop loss in this case will end up being just below this overall swing low. Or if you want to be a little bit more conservative, you can be able to place it below that swing low right there, looking to be able to go after this next overall level at 12,960 as your first area, and then ultimately all the way up to where the D extension is going to end up being, which I think the D extension on this from a daily perspective is, let's go. Daily perspective is going to end up being at 13,394. Okay, so typing a while, yes, if that makes sense, but we are getting close to a buy trade on the United States dollar index pairs, and because we have something on the index pairs, that means that most United States dollar based pairs are going to start seeing strength. So Euro United States dollar, you should be looking at sales. Pound United States dollar, you should be looking at sales. US yen, you should be looking at buys, right? All of those potential movements should be showing up relatively quickly today or a little bit later on going into Friday and next week. Okay, so there you go. United States dollar index, United States oil, with this oil in general, is still in consolidation. There's still no movement to be able to take within this. The long-term consolidation, which is inside of this yellow box, is at $70 a barrel compared to $82.50. We have an inside consolidation inside of this area at $72, $72.50, all the way up to $82.50 when it comes down to that. As long as this market stays in between these overall numbers, you only have a 33% chance of being able to win. So there's no reason to be able to look at being able to do any trades off of oil. That's why I said that when Governor Macklem ends up speaking today, I don't think he's going to end up moving the market or rocking the market enough to be able to get us into a point to where we can look at being able to trade. Now, once this does happen, I would look at being able to buy at 82.50, trying to get all the way up to 94. Stop loss will end up being basically at the halfway point of that consolidation on the latest swing low that ends up happening. If the market falls below $70 a barrel, then we're looking at being able to get out right around $63 a barrel, which was a daily D extension that ends up moving. But until then, no trades to be able to take off of that one. Type in a Y, yes, if that makes sense, with oil. That also means that if you're trading anything that has a Canadian dollar crossover, Canadian yen, pound Canadian, US CAD, Euro CAD, all of those pairs are probably in consolidation. There's not great opportunities to be able to trade those unless the other pair is just dominant. So kind of like with US CAD, you're probably going to end up seeing some type of movement, but it will be movement solely based because of the United States dollar, not the Canadian dollar. Okay, so there we go. Hopefully that makes sense for everybody. Let's take a look at gold. Gold has a strong correlation between the Japanese yen and the Australian dollar. Um, we end up having a trade on gold, and I'm going to kind of take a step back so everybody can be able to see it. From a weekly perspective, we talked about the transition trade when it came down to United States dollar pairs. And because we had that transition between United States dollar starting to get a little bit of strength, we can see that this market is starting to have a little bit of a retracement from this overall phase to the downside. Market pushed all the way up to 1970 a few weeks ago. Once it ended up breaking out of this consolidation, it was in a long-term consolidation from 1618 to 1671, and then when it broke out of that area, it finally ended up pushing up to the 1940s areas. Now we are, if we're talking about this from an A, B, C, D phase, this is our B to C phase, meaning that the market is basically in that retracing. That ultimately means that the United States dollar is probably going to end up being weak going into the end of the year. But ultimately, for right now, the United States dollar is gaining strength as a currency. So if we're looking at this, we're talking about at least 7 to 11 candles. So we're talking about 2 to 3 months of overall retracement phasing. So we take a look at it from a daily perspective. All we're trying to do is get high prices. The last time that we ended up taking a sale on this one was at 1874. Our take profit in this position was at 1803, which is the basically the 61.8, or basically the sweet spot when it comes down to this retracement. I do believe that this market is going to continue. I do believe that this market is going to continue going through its phase through the downside. But ultimately, the question is, are we going to continue seeing momentum? There was a slight consolidation that made us get out the trade. I ended up looking at being able to get in right around 1855 again. Since then, the market fell all the way down to lows. Was at 1830. Remember, the 2-hour on the United States dollar index is getting close to being able to break a counter trend line break. If you see that, you're probably going to see this happen as well. So 2 hours in the sell zone, all I'll look for is this market closing below this overall candlestick. Stop loss will be above this overall high, will be above 1842. So anywhere right around 1850 will be safe when it comes down to the stop loss of this move right here, flowing all the way down to that 1803 number when it comes down to that. Now we're going to need a little bit more of a catalyst, but I do expect that that's going to happen at some point in time. What's going on? CMG? Hopefully everything's going well with you. Hey, did you get into that US 30 trade, and did you get out early enough to be able to make profit? Did you get into the US 30 trade, and did you get out of the trade early enough to be able to make profit? You should it allowed us to be able to stay in about 6 to 7 hours before the news actually hit. Let's see. But gold, nothing to do until that counter trend line break is broken. I'm going to change this color. Typically, I have this as purple. I have been out of it all week trying to create content for expert advisor reviews, and then obviously Valentine's Day and everything else ended up happening. Good. So Bitcoin. So this is what happened. I'm only going to focus in on these 3 boxes right here. Well, let's focus in on this one right here. I'm going to point out an arrow and just show what ended up happening. Long-term consolidation, or the lowest point that it ended up falling down to, was basically at 16,000 or right around 15,500. Had a tight consolidation between 17,000. We end up taking a trade throughout that overall area. End up getting out at 18,240. Went into another consolidation, which basically ended up completing this overall phase, or getting into this large consolidation phase that there was, and then after that broke the highs of 21,000. We end up talking about being able to get into another trade from 21,000 all the way up to the top of this overall resistance at 23,790, because that's where we end up seeing most of the pivots actually be in that area overall. Now, since then, market went into consolidation and failed. When it fell down to the downside, we end up talking about two potential areas of where this market could potentially fall. And if it was going to end up bouncing, it was going to end up bouncing basically at past resistance turned into future support. And that's exactly what ended up happening. This market ended up, I did not take this trade because I was out of the office, but market broke out of 21,430, went inside of this large consolidation right here. Once it broke and fell down, we ended up talking about two different options. We said that if it broke below 21,430, then the market was going to end up going all the way back down to 20,590. If it held as support, then after that, if it broke above 22,310 again, then after that, I'll look at being able to make its movement. Now, because Bitcoin is at 24,000 and has broke above this overall position, keep in mind what's probably going to end up happening. Let's look at this from a daily perspective now. The daily is in the buy zone when it comes down to this overall movement. It has one last position that it has to be able to break before ultimately being able to go back into, or ultimately being able to retest that 29,000 major support that ended up happening over the course of 2021. So I'm saying this to everyone, especially for the people that love being able to buy crypto or being able to trade it from this overall perspective. If it breaks above 25,000 and closes above 25,000, then it's going to go up to 29,000 very quickly. Did you say that you sent the files? I believe so. I ended up sending out like 6 different files to six. I ended up sending out 6 different files. I have your email. Check it and let me know. If I didn't, then I have some free time this morning. Yeah, please let me know, because if I didn't, then I can send it this morning. I have a little bit more free time than what I have over the course of the last 2 days. Um, but that would have been sent to your email. Market's at 24,350. When we look at it from a daily perspective, we look at it from an hourly perspective, we see this market starting to retrace a little bit. It would not surprise me if the market does something to the equivalent of this, either falling down to 24,350, finding support, and then after that starting to break again, or that's option A. That's just a quick slight retracement, or falling down to 23,790, tapping that, holding off, and then after that popping up again. I think this is probably the more natural move, the second one compared to the first one. But make sure that you keep your eyes out on it. I will look at the 4 hour. I will look at the 4 hour and see if the 4 hour gets into the buy zone. And once that happens, then after that, basically what will happen is you turn past resistance again into future support. 23,790 is the most logical position of, if you're trying to get back in, this would be the position where I would look at being able to get in. Okay. From an overall trading perspective. Okay. Okay, CMG, I got you. Let me write that down. It'll be the first thing I do this morning. Let's see. I send you a private message once all that's done. Yes, I'll send you a private message once that's done. Let me get done with this, and we end up going from there. All right, let's talk US 30. So we had CPI data that ended up coming out a few days ago. I didn't have a live stream yesterday. I did not have a live stream yesterday, but I want to talk about the trade that we end up taking, or the trade that I end up suggesting. If you end up taking the trade, great. If you did not, obviously, everybody has their own trading strategies. So this is what I was looking at, or this is my thought process. Market has been in consolidation long term inside of this yellow area from basically 34,400 with a long-term support of 32,550. And then after that, it ended up going inside of this major blue area, which has been the consolidation over the course of the last 2.5 weeks. I end up saying that if the market ended up breaking above, 32,250, then I said that there was going to end up being a great trade that you could be able to get into. And I said that there was two positions where I would look at being able to get out. The first position was at 34,700. The second position, if the market was going to keep on going up to the upside, we ended up being at 35,400 when it came down to that movement. Now, what ended up happening was that we ended up getting into this trade right here at 34,250. I think I ended up getting in at 34,250 and 34,180. Market ended up popping up based off of CPI data, got all the way up to 34,500. From there, quickly ended up starting into resisting and starting to turn around from that overall area. I'm going to show this based off of the 15-minute. And then from there, I ultimately ended up getting out of the trade because with that much of a push, what ultimately ended up happening was that the market ended up breaking that fast up and fell down about 600 points to the downside. And if you would have allowed it to be able to stay in that trade based off of that, then you would end up getting kicked out of the trade. So I ended up getting all the way up, I think, to 34,450 and getting out of it. And being able to make right around 200 points off of this movement. Whether the 300 to 400 points that we was looking at, no, but 200 points I'd take when it comes down to this. Currently, right now, there's nothing else to be able to do as the market has fell back inside of this blue zone again. If the United States dollar is going to continue to get weak, continue to get strong, then what ultimately is going to end up happening is that indexes are going to end up getting weaker. Okay, so now we're at the point to where I think that the market's going to fall, but there's no trade to be able to take once again, because as long as this market is inside of this blue area, you only have a 33% chance of being able to win. Okay, so until then, nothing, unfortunately. NAS 100, last pair of the day. NAS 100 went through that consolidation, broke out of this area, but went back inside of this overall area right here. As soon as it did that, once again, it kind of canceled out itself. It has another 33% chance of being able to win, but there's no trades to be able to take. This market has been in this consolidation 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days at this particular point. Remember, the longer that it stays inside of consolidation, it is a good thing because it allows the breakout to be even stronger. But until then, there's no trade to be able to take off of this one as well. So obviously, everyone has been in here for about 30 minutes. I think we've only talked about 2 potential trades, and all of them are based off of United States dollar-based pairs. So what I will suggest is that I would say take a look at Euro United States dollar first. Let's see what's happening with that overall pair. I will look at being able to sell when it comes down to that if you have not sold already. You have not sold already. Essentially what's happening with most of the pairs. And if you notice, take a look at what's happening when we talked about what's happening with gold, right? We end up saying that gold was basically retracing. That's the same exact thing that's happening with Euro United States dollar. It'll be the same thing that's happening with pound United States dollar. There you go again. You see that the market popped up and had a rejection. It's the same thing that you're going to see with US CAD, but I think United States dollar is probably stronger than the Canadian dollar. The United States dollar is still pushing up to the upside. It's just retracing now. It's the same thing that you end up seeing with US yen, where the Japanese yen was in control for a good portion of that overall movement as well. So now we're finally starting to be able to get that counter trend line break. Let me take a look at US yen one last time before we start making a move, before we get out of here. Because if you look at this is exactly what you see off of what's happening with gold. Market fell all the way down to the 8.6. That means that the D extension off of this movement, I'm going to get rid of these real quick. Get rid of that. The extension will end up being at 149.40 if the market continues to phase in the way that it's doing. Doesn't necessarily mean that it's going to end up being strong, but we take a look at it from a daily perspective. The weekly's up, the daily's up. That's two things that I like to be able to see. Let's take a look at it. Let's see. The weekly's up. The daily is finally broken out of this counter trend line break. It's getting close to the sell zone. It had a retest. I will be a little bit more weary off of this one, but I do like what I see overall. Um, from a 2 hour perspective, the extension has not been hit at 135. Look for a counter trend line break to be able to happen at some point right here. It probably might fall off a little bit more. It may end up falling down to um, let's see, probably might end up falling down to right around 131 first, or at the least back to the B because it's above the B. 132.40. If it breaks somewhere around that area, then I look at being able to buy it with stop loss just below this overall swing low of 131.50 and a take profit to 135. I do like that as a position. I just want to see this thing kind of play out a little bit more. If it breaks above early, then use it as a scalping mode or use it as a scalper, and then after that, just kind of ride out where the swing low is actually from that point. You like what I end up doing, please make sure that you end up clicking on that share button for TradingView. Click on the like and subscribe button for YouTube. Um, Obviously, we have a couple of videos that's coming out on Expert Advisor reviews. The next one is going to end up being on the Dark Venus EA, which is a free Expert Advisor you can be able to take a look at. Which is very cool. They end up using scalping technology to be able to use that. And then after that, I think we're going to end up doing one on the Maserati EA, which is on MQL5, as a way for you to be able to kind of see it, see how well it works, anything else like that. Once again, no promotion, no nothing like that, but that's another way to be able to take a look at it, look at other options, and kind of go from there. Like always, make sure that you end up planning your trade your plan. I see each and every one of y'all on Monday because this is the last Thursday video. Obviously, everybody, take it easy.